Okay, so very good afternoon to all the members, all the audience who are joining our today's webinar. So today we have one of the most tricky and one of the most important topic which we face in every year, our income tax season. Every time we have new questions, new answers, new clarifications. So Institute has come with a wonderful topic of 44 AD, ADA and 44 AE comparison and clause by clause analysis. So we have with us our chairman of Direct Tax Committee, CA Piyush Chajar sir. The speaker for the session, CA Rajesh Mehta sir. Firstly, would like to introduce our chairman, as all of you might already knowing Piyush sir. CA Piyush Chajar sir, being a 25-year of an extensive expertise as a senior partner of Chajar Doshi. He is a chartered accountant from Mumbai. His educational background boasts a bachelor degree in BCom from NM College and is also a DISA qualified. His rich educational foundation has equipped him with a knowledge and expertise to excel in the interactive realm of finance and taxation. Piyush sir is a Central Council member, already elected in 2022-25, and this is his second term from 2025 to 2029. He is also a technical advisor on International Audit and Assurance Standard Board and a member of Committee of Study Fiscal Regimes and Other Statutory Compliance SAARC. He is also a member of South Asian Federation of Accountancy SAFA. He is on the board of Wimplas Limited, Cello World Multibase Limited. In addition to his contribution, extend to the Reserve Bank of India, where he held a key role as a member of an external advisory committee. Beyond his professional pursuits, CH Hajar sir is actively engaged in various trusts and organizations where he serves as an independent director, board member, vice president, and trustee in different capacities, further showcasing his commitment to social as well as our community. So, requesting our chairman of Direct Tax Committee, Piyush sir, to please address our audience on the webcam.
Thank you very much, C. Krishna Purohit, the Vice Chairman, the moderator for today's session, and the Vice Chairman of Vasai branch of WIRC of ICI. C. Rajesh Ji Mehta, the faculty for the day speaker, expert on Section 44 AD. When it comes to presumptive taxation, I think so. We could not have a better speaker than Rajesh Mehta Ji. Obviously, there would be some fight between myself and Rajesh Mehta Ji when it comes to taking certain position under Section 44 AD. But as I said, those are the views of the speaker, obviously not the views of the institute, which we would be talking about. I would request you to please do refer to our guidance note. Just for the information of the members, as I had spoken last week, exposure draft time period is already over. We have received various suggestions. Those are being incorporated. And I expect that to be released by 30th of July when the council meeting is happening in Delhi. So we will be able to release this guidance note and would be available for the benefit of the members. And as I always, and at the cost of my repetition, I always tell, please do follow the guidance from tax audit. It's a regulatory publications and it is at a very higher pedestal. For an example, even today, when the judiciary passes judgments in relation to the assessment proceedings, they have been relying upon this particular guidance note. And various high courts have held that the guidance note has been actually been drafted by the expert body, which is institute, expert body of the accountants. We should follow that. And sometimes, as I always say, as I said, there is a difference of opinion between myself and Rajesh Bhai also. But there may be some inaccuracy which you may not agree what is mentioned in guidance note, but guidance note is to ring fence you. So if you are put to a question tomorrow by any regulatory body, you can always fall back and say that boss, I follow the guidance note and therefore I cannot be held as a negligence in my professional duty, and therefore the guidance note is important. It is like a judgment of a Supreme Court which you may not like it, but it is final. Similarly, you may agree with the contentions or may not agree with the contentions in the guidance note, but it is a final when it comes to accounting and because ICI's publications are at very high pedestal. So please do follow. One small good news, obviously, you all are aware very well, and it gives me an immense pleasure also now to officially also confirm that whatever report which has gone by the special committee, it includes almost 101 suggestions given by all members. Obviously, when I'm talking about all members, suggestions are not suggestions of the council or the committee or chairman of the committee. It is the suggestions which have come from various membership across. Even individual members had sent suggestions. We have compiled that and we have given our suggestions to the special committee. And it is first time in historically that 101 suggestions accepted. I'm really very proud of all our membership for giving such a good suggestions about it, which have been accepted. And most importantly, as a lot of messages were coming, I can officially tell you certain extracts and just again from the status that yes, accounting and auditing only chartered accountants are expert, and on the merit only they can do an audit unless and and obviously when somebody is reposing such a confidence, our member expected के ऊपर हम जैसे हिंदी में बोलते हैं कि हमको खरा उतरना है. You should actually repose whatever confidence, we should actually live it up to it. And therefore, I say, please do follow, do best of your audit. Don't be worried about due dates. Nothing is going to happen. Maximum penalty is 1.5 lakhs. And I always tell, even if you are not satisfied with the financials to meet the due date, you should not sign it. It should never happen. It does not penalty. And that too, if you are not signing an audit, not a lot of the ground of not signing an audit report itself is a reasonable ground for not imposing a penalty. And therefore, please see to it that when you are signing an audit report, you are following all the accounting standards, auditing standards, guidance not issued by ICI. And I believe, it's my personal belief that nobody can then put a question to you or our profession for that matter. So please keep that thing in the mind. Meanwhile, also one notification would be coming in this week. I hope it gets notified in this particular week. It's already approved after council approval. President has also approved in regard to tax audit limit. A signing limit of 60 per member would be enforced from 1st April 2026. So please keep that in mind. Please watch for that and please do look into that. So without taking much of time, of course, as I said, 44 AD, even after so many years, I think so maximum questions are there. Krishna ji, you will have to do a lot of good moderating. You will have a lot of questions on that. You will have to compile and put forward to Rajesh bhai. And I'm sure Rajesh bhai will definitely satisfy each and every questions to that. Thank you very much for this. Once again, thank you Rajesh bhai and Krishna ji for joining us. Thank you. Over to you, Krishna.
Okay. Thank you so much, sir. Piyush sir, for your words. As rightly said, it's a moment of pride for CA, and it's the hard work of our institute which has given us an unique identity. And again, it's also recognized by all the bodies that CAs are only authorized to do the audit work. Since audit is our core, our heart is in audit. Thank you so much for the initiative taken by the institute from the DirectX committee and institute as a whole. Now, we'd like to introduce our expert, our session speaker for today's session, CA Rajesh Mehta sir. CA Rajesh Mehta sir is a practicing chartered accountant from Indore, having an experience of more than 30 years. He was the National Secretary General in the year 2023 of All India Federation of Tax Practitioners, and he was Vice President of All India Federations for the year 2020, 21, and 2024. Presently, he is a National Executive Committee member of All India Federation Committee. He is convener and Directors Representation Committee of AIFTPA. He is renowned Directech speaker across India on issues of TDS, TCS, capital gain, charitable trust, search, seizure, penalty, prosecution, and so on. He has delivered various sessions at various branches, tax councils, bar councils, AIFTP, business and trade association, and also online platforms. He played a key role in ICI technical guide publication on report on religious and charitable trust. His contribution in ICI publication on the guidance note on tax audit under section 44 AD. Sir, we thank you again for your contribution in every year's guidance note which we release for tax audit. His articles and views on income tax provisions are frequently published in tax newsletters, magazines, and online forum. He completed his HSC from Bhilwara, Rajasthan. He moved to Indore for pursuing his CA, awarded by the Chief Minister of Rajasthan, Sri Haridev Joshi. and Governor of Rajasthan Sri O.P. Mehra for his merit list Rajasthan in HSC. Received award at elocution and debate competition and award by the Chief Minister of Rajasthan at various forum. With this, have a huge round of applause or have a huge commendable voice for our session speaker CA Rajesh Mehta sir. With his expertise, I'm sure that he will be beneficial for all our members and our maximum doubts will be get sorted. Over to you, Rajesh sir.
Thank you, Krishna ji. Respected Piyush Chhajer sir, Chairman Direct Taxes Committee of ICI, Vice Chairman Vishnu Agarwal ji, and all the professional brothers and sisters. Today, I have been given an opportunity to discuss some important issues of the Section 44 AD, 44 ADA, and 44 AE of the Income Tax Act. So I would try to cover most of the things which we face in our day-to-day routine practice. So my screen is visible, Krishna ji?
Yes, it's visible.
Yes.
Yeah.
Okay. So, dear friends, first of all, we have to decide who is eligible to opt for Section 44 AD of the Income Tax Act. Because many times we think that Section 44 AD presumptive taxation is so much easy. But before opting to this and before deciding, while deciding, we have to answer various questions whether our client is covered under 44 AD or not. So any person who is an individual, HUF or a partnership firm, not being LLP, and he is resident, then he is eligible to opt for Section 44 AD and he should carry out the eligible business and accept business covered under Section 44 AE. So if anyone who is carrying out any business but not the business of plying or hiring of goods carriages, then he is eligible for 44 AD. Then another condition is his turnover should not exceed rupees 2 crores. And this limit is also 3 crore subject to certain condition. If amount received in cash during the previous year does not exceed 5% of the total turnover or gross receipt of such previous year, then 44 AD eligibility is up to turnover or gross receipt of rupees 3 crore. So here we have to see only the gross receipt during the previous year. So whatsoever our turnover should not exceed 3 crore, whatsoever gross receipt were during the year, 5% of that should not exceed in cash. Then only he can opt for 44 AD up to 3 crore. And here another condition is that check or bank draft, which is not account pay, shall be deemed to be received in cash. So this must also be kept in mind. So what is the income to be offered under Section 44 AD? 8% of the total turnover or gross receipt of the assessee in the previous year on account of such business, or higher sum claimed to have been earned by the assessee. So assessee can declare at least 8% or more. Then 6% can also be declared, but subject to certain conditions, that the 6% of the total turnover or gross receipts received by account pay check, account pay bank draft, ECS through a bank account, or electronic mode specified under Rule 6A that is online payment system received through credit card, debit card, IMPS, net banking, UPI, Bhim app, NEFT, RTGS, etc. So during the previous year, on or before the due date specified under Section 139, subsection 1 of the Act. So if anyone wants to declare 6%, he will have to assure that the amount has to be received through banking channel, and such amount, even if received after the previous year, but it should have been received on or before 139(1) due date. Then such amount will be eligible for 6%. Otherwise, remaining amount will be eligible for 8%. audit under section 44AB if opted out of presumptive taxation. So if any of the assessee has opted out of presumptive taxation, then he will have to get his books of accounts audited under section 44AB of the Income Tax Act. If assessee opted for section 44AD subsection 1, that is, he declared his income at the rate of 8% or 6% or more of the income. But he does not want to follow 44AD in the immediately succeeding year or in any of the 5 assessment year relevant to the previous year in which such income is declared as per 44AD. That is, he wants to declare income less than 8% or 6%. Then he shall not be eligible to claim the benefit of 44AD subsection 1 for 5 assessment years. So if he has opted out of 44AD in any year, then for subsequent 5 assessment years, he cannot again opt for 44AD subsection 1. In such a case, if his total income exceeds maximum amount which is not chargeable to income tax in that year, then he has to keep and maintain books of accounts and documents as per section 44AA subsection 2 and to get them audited under section 44AB clause E. And he will have to furnish the audit report as required under section 44AB of the Income Tax Act. Then 44AD also does not apply to certain persons. So conditions are specified under section 44AD subsection 6. Any person who is carrying on the specified profession as referred to in section 44AA subsection 1. So who are those specified persons? CA, doctor, engineer, advocate, company secretary, interior decorator, architect, film artist, etc. These are the specified profession specified under section 44AA subsection 1. So if any of the person is covered under specified profession, then he cannot opt for section 44AD. Then second condition, who cannot opt for 44AD, any person earning the income in the nature of commission or brokerage, or any person who is carrying on any agency business, then such person are not covered under section 44AD subsection 6. Can an individual being commission agent opt for section 44AD? No, any commission agent cannot opt for 44AD because there is a restriction as specified under 44AD subsection 6. Such an individual has to maintain books of accounts if his income from commission business exceeds rupees 2.5 lakh or his gross receipt exceeds rupees 25 lakh. And audit is required under section 44AB clause A if his gross receipt from commission exceeds rupees 1 crore. TDS and TCS provisions are applicable even if opted for presumptive taxation. So if any of the person who is eligible to opt for presumptive taxation, he is a businessman or a specified professional. But TDS provisions are applicable to such persons. If a turnover or gross receipt of the assessee is eligible for 44AD and 44ADA, it exceeds rupees 1 crore and 50 lakh for the professional. So in case of business, if his gross receipt or turnover exceeds 1 crore, or in case of a specified profession, if gross receipt exceeds 50 lakh, then such person are required to deduct the TDS and required to collect the TCS as under section 194A, 194C, 194H, 194I, 194J, 194R, 194S, 206C subsection 1, 206C subsection 1F. Every individual or HUF are liable to deduct TDS under section 194IB, 194M, etc. And section 194T is applicable to every partnership firm, even if opted for presumptive taxation. So if any of the partnership firm whose turnover is even less than 50 lakh or whatsoever turnover, if they are paying any remuneration or interest to the partners, then section 194T is applicable to such partnership firm, even if they have opted for presumptive taxation. Section 269SS and 269ST is applicable even if any of the person who has opted for presumptive taxation, even though he is required to follow the provisions of Section 269SS and 269ST. So, say for example, any of the person who is a retailer, he sell goods of rupees 2.5 lakh to a single person, and he has accepted rupees 2.5 lakh from that buyer. So, if the income tax department came across at any time that such person has violated provisions of section 269 ST, then penalty under section 271 capital DA can be imposed on such assessee even if he is opting for presumptive taxation, because he is liable to follow these provisions. But if the assessee wants to opt for 44AD having turnover up to 3 crore and his aggregate cash received during the previous year is not in excess of 5% of the total turnover or gross receipt, but recovery of debtors outstanding at the end of previous year is not realized up to the due date of 139(1), or any recovery from such outstanding debtor is in cash in the subsequent year before 139(1) due date. So in the next slide, there is answer. Say for example, total turnover is of rupees 2.8 crore and aggregate of the cash received during the previous year is rupees 10 lakh. So during the financial year 2024-25, there was turnover of rupees 2.8 crore. Amount received in cash is 10 lakh by way of a sale of fixed asset received from unsecured loan and current year recovery from debtors, etc. And outstanding debtors as on 31st March 2025 are rupees 75 lakh. And out of this, rupees 30 lakh has been realized in cash in the succeeding year, that is in the financial year 2025-26. And rupees 30 lakh has been realized through banking channel or online mode as per rule 6A during financial year 25-26 before 139(1) due date. And the remaining 15 lakh is still due on 139(1) due date. Then, in such a case, out of turnover of rupees 2.8 crore, 35 lakh is received in cash and 15 lakh due up to 139(1) due date will attract 8% deemed income, and remaining rupees 2.3 crore will attract 6% deemed income. So he will not be debarred from this 3 crore limit, because the limit of 3 crore says that receipt should of receipt of your turnover. So in the case of 3 crore, there is no condition that all your amount should be received by 139(1) due date. So there is only condition that during the year your receipt should not exceed 5% in cash. Another example is turnover of rupees 2.5 crore and aggregate cash received during the previous year is not exceeding 5 crore. Out of 2.5 crore, the amount of rupees 2 crore is received through banking channel during the previous year 2024-25 and rupees 4 lakh has been received in cash during the previous year 24-25 and rupees 5 lakh received in cash during the immediately succeeding year and rupees 6 lakh is received through banking channel in the immediately succeeding year in financial year 25-26 up to 139(1) due date, and remaining 35 lakh is still due up to 139(1) due date, that is up to 15th September 2025. So in such a case, rupees 2.06 crore will be liable for 6% deemed income and 44 lakh will be liable for 8% deemed income under section 44AD, and even though he will be eligible for 44AD up to turnover of rupees 3 crore. When is a person carrying on business required to get books of accounts audited? So every person carrying on business, if his total sales, turnover or gross receipt is exceeding rupees 1 crore, is required to get his books of accounts audited. So many times we think that what is the limit of tax audit? Whether it is 1 crore, whether it is 2 crore, 3 crore or 10 crore. So tax audit limit is still rupees 1 crore under section 44AB clause A of the Income Tax Act. But there are some other conditions. If any individual or HUF or a partnership firm being not LLP opted for 44AD and turnover is not exceeding 2 crore, then they are not required to get their books of accounts audited. Or if any of the person, his sales, turnover or gross receipt not exceeding 10 crore and aggregate of all payment received including towards sales, turnover or gross receipt in cash does not exceed 5% of the said amount and aggregate of all payment made including towards expenditure in cash does not exceed 5% of the said payments, check or draft which is not account pay will also be treated as a cash. So here up to 10 crore assessee is not required to get his books of accounts audited, but there is a condition that aggregate of the payment received during the year from either business turnover or unsecured loan or what if even if any immobile property has been sold by the assessee. So if all 5% of all received during the year should not be in cash, more than 5% should not be in cash, and same thing is here with the payments. So whether payments made for the purchases, made for any of the expenditure or for the purpose of any immobile property, it should not be more than 5% in cash. Then only up to 10 crore, he is not required to get his books of accounts audited. He is only required to fill profit and loss account and balance sheet in the ITR 3. If any individual or HUF or a partnership firm not being LLP during previous year having cash receipt, as already I have told that up to 3 crore, only here we have to see only the receipt up to 3 crore, 5% of the total turnover of gross receipt. So aggregate receipt of unsecured loan or sale of fixed asset has not to be considered while determining the limit of rupees 3 crore, and there is nothing to do with the payments in case of 3 crore limit. Whether any individual HUF partnership firm, not LLP, engaged in business having turnover of rupees 1 crore or less and not opted for presumptive taxation under section 44AD is required to get books of accounts audited if his income from such business is less than 8% or 6%. So say for example, anyone if this is the first year of the business for such assessee and his turnover is not exceeding rupees 1 crore, or if the assessee has not opted for 44AD in any of the 5 immediately preceding previous year, then he may declare less than 8% or 6% of the income, and also no need to get books of accounts audited, that is actual profit or actual loss may be declared and profit and loss account and balance sheet are required to be filled up in ITR 3. So if during the earlier 5 years he has never opted 44AD or this is his first year of business, then he is not required to opt for 44AD. So if he has not opted for 44AD, then in the subsequent year until his turnover crosses 1 crore, he will not be liable for audit under 44AB. Thereafter, whenever it crosses 1 crore, then he will be covered under 44AB clause A for tax audit under 44AB. Any person who is a commission agent or a specified professional also having business income eligible to be covered under 44AD, can he simultaneously opt for 44AD for that business income? So whether a commission agent can file ITR in 3 by filling the P&L account balance sheet for his commission income and simultaneously opt for 44AD. So as per section 44AD, any person who derives income from a specified profession or who is a commission agent is not eligible for 44AD, and also he cannot opt for 44AD for business income, otherwise eligible for 44AD. However, income tax portal is allowing this. Income tax portal allows to simultaneously offer the 44AD, 44ADA and commission income. So because 44AD subsection 6 say that the person, so it does not restrict it to a business. It has restricted the word person is there. So if person is covered, so all of his business are debarred if he has any commission income or any specified professional income. So this is only my view, but if ITR utility is allowing, then it may be the intention of the government to allow all this simultaneously. Whether partners' remuneration and interest is liable or can be covered under 44 AD, there is a judgment of Honorable Madras High Court in the case of Mr. Anand Kumar versus ACIT, wide appeal number 388 of the 2019. In this case, Honorable Madras High Court held that while filing the return of income, the assessee had applied presumptive rate of tax at the rate of 8% under 44 AD and returned income of rupees 4,68,000 as income from remuneration and interest received from partnership firm. The assessee, who is an individual in the instant case, is not carrying out any business. Therefore, the remuneration and interest received by the assessee from the partnership firm cannot be termed to be a turnover of the assessee. Therefore, appeal of the assessee was dismissed by Honorable High Court. There is similar judgment of Honorable Bombay High Court. In that case also, Honorable Bombay High Court has stated that under Section 28 Roman 5, any interest, salary, bonus, commission or remuneration by whatever name called due to or received by a partner of a firm from such firm shall be chargeable under the head profit and gains of business and profession. However, interest and remuneration, etc., received by an assessee from a partnership firm cannot be treated as gross receipt or turnover of his business, as the partner is not doing any business, because it is not his business turnover, because partner is not doing any business or profession independently, but it is the firm which is carrying on the business or profession in which assessee is only a partner. This is the judgment of Honorable Bombay High Court in case of Perizad Zorbian Irani versus PCIT Mumbai. So, for the specified professional who is required to opt Section 44 ADA, any individual and partnership firm not being LLP can opt for Section 44 ADA. It should be resident engaged in a specified profession as per Section 44 AA subsection 1, and the total gross receipt does not exceed rupees 50 lakh in a previous year. He shall be required to opt Section 44 ADA. As I discussed in earlier slide, that under Section 44 AD, if it is the first year of business or 44 AD was not followed in earlier 5 years, the assessee is not required to opt for 44 AD. He can only furnish P&L balance sheet in ITR 3. But similar relaxation is not there under Section 44 ADA. Even if this is the first year of business of the assessee, he cannot declare less income less than 50% of the gross receipt. So if his gross receipt are not exceeding 50%, 50 lakh rupees, then he has to declare minimum 50% of the total gross receipt in profession, as the case may be, or a sum higher than the aforesaid sum claimed to have been earned by the assessee shall be deemed to be profit and gain from such profession. If amount received in cash, check or bank draft will also be treated as cash if it is not account paid during the previous year, does not exceed 5% of the total gross receipt of such previous year, then 44 ADA apply only up to gross receipt of rupees 75 lakh. Can he opt 44 ADA in subsequent year if he has not followed 44 ADA in current year? Yes. So under Section 44 AD, there is a condition that if he has opted out once, he cannot opt 44 AD again up to next 5 years. But under Section 44 ADA, the assessee can change this option every year. 44 AD subsection 4. Any assessee who claims that his profit and gains from the profession, 44 ADA subsection 4, profession are less than 50% and his total income exceeds maximum amount which is not chargeable to income tax, then he shall be required to keep and maintain books of account and other document as required under Section 44 AA subsection 1 and get them audited under Section 44 AB clause D and furnish the audit report as required under Section 44 AB of the Income Tax Act. In some earlier year, in last 5-6 years, however, during last 2-3 years, this problem is not being faced. But earlier to 2-3 years, there was a problem that if TDS has been deducted under 194J, whereas it should have been deducted under 194C but deducted under wrong section, then CPC would be was making prima facie adjustment under section 143(1)(a) and automatically treating the income under section 44 ADA without following the law as required, as specified by the CBDT or the income tax provisions. So, if TDS is wrongly deducted under 194J, whether the assessee is bound to offer income under 44 ADA, or can CPC make prima facie adjustment under 143(1)(a) Roman 6 by converting section 44 AD to section 44 ADA? If TDS is deducted under 194J, even though assessee filed ITR opting under 44 AD and not opting 44 ADA because that income was not from a specified profession. Say, for example, the person was a photographer, he was not a specified professional, but his TDS was deducted under 194J, whereas it should have been deducted under 194C. CPC has no authority to make prima facie adjustment under section 143(1)(a) by converting section 44 AD to section 44 ADA. Addition of income appearing in Form 26A or Form 16A or Form 16 is not allowable with effect from 1st April 2018. So, Income Tax Act itself has been amended with effect from 1st April 2018 that no prima facie adjustment can be made. There is a judgment of ITAT Chennai bench in case of PVN Associates. In that judgment also it was held that this is violation of CBDT circular number 689. Prima facie adjustment cannot be made under section 143(1)(a). Who is a specified professional for the purpose of section 44 ADA? So, as per section 44 AA subsection 1, any person who is engaged in profession of legal profession, medical profession, engineering, architecture profession, or the profession of accountancy, technical consultancy, interior decoration, authorized representative, company secretary, film artist, profession of information technology. So these are the specified profession which are compulsorily required to follow the section 44 ADA. What is the rule regarding maintenance of books of accounts by the specified professional? As per Rule 6F, every person carrying on legal, medical, engineering, architecture profession, profession of accountancy, technical consultancy, etc., if his gross receipt in the profession exceed rupees 1.5 lakh in any of the three preceding previous year, and profession of company secretary and information technology is also a specified profession. Books are to be maintained are the cash book, ledger, journal, copies of the bills, serially numbered, original bills, or receipts or vouchers in respect of expenditure incurred are required to be maintained by 44 ADA specified professionals. Any person carrying on medical profession will also have to maintain form number 3C and inventory of medicines and consumables at the start and end of the previous year. Such books of accounts has to be kept for 6 years from the end of the relevant assessment year. The said time limit is applicable only to the specified professions only. So, section 44 AA subsection 1 and rule 6F specifies that specified professional will keep and maintain the books of accounts for 6 assessment years. But in my opinion, such time limit has not been specified for the business or for the non-specified professional. However, as per GST Act and Companies Act, the assessees are required to maintain their books of accounts. What is the provision regarding maintaining books of accounts by business or non-specified professional? As per section 44 AA subsection 2, any individual or HUF carrying on business or non-specified profession will have to maintain books of accounts as may enable the assessing officer to compute the taxable income. If his income from business or non-specified profession exceeds rupees 2.5 lakh or his turnover or gross receipt exceeds rupees 25 lakh. So, say any person who has not opted for 44 AD, his turnover is less than 1 crore, but turnover is more than 25 lakh. then he will be required to fill the P&L balance sheet in ITR 3 because he is required to maintain books of accounts if his turnover is exceeding 25 lakh or income is exceeding 2.5 lakh as per section 44AA subsection 2. Any person other than individual or HUF will have to maintain books of accounts if his income from business or non-specified profession exceeds rupees 1.2 lakh or his turnover or gross receipt exceed rupees 10 lakh. Which ITR form is required to be used? In case of an eligible assessee opting for presumptive income, 44AD, 44ADA and 44AE, individual HUF and partnership firm are required to file their ITR in form number 4, SUGAM. ITR 4, SUGAM is required to be filed in case of presumptive taxation. If they have any capital gain, then ITR 5 is required for partnership firm and ITR 3 for individual and HUF. Say, for example, the capital gain, long-term capital gain exempt is only up to 1.25 lakh and it is more than 1.25 lakh, then ITR 3 will be required to file even if assessee individual is opting for 44 AD. HUF is not covered under 44 ADA. So from the assessment year 2017-18, 18-19, HUF has been kept outside 44 ADA. Earlier to that, HUF was also mentioned. However, HUF can never be the professional person because HUF has no mind of its own. Its karta can do. So any income earned by the individual person will always be his individual income, cannot be income of the HUF in case of the specified profession. ITR 3 is required to be filed by individual and HUF having income from profit and gain of business profession and not following and covered under non-presumptive income. So no limit on total income or any capital gain and no limit on agriculture income. If agriculture income is more than 5,000, then ITR 3 is also required to be filed even if presumptive income is offered. Individual and HUF whose audit is conducted are required to file ITR 3 in place of ITR 4. If income is up to 50 lakh, then only ITR 4 can be used. Who cannot file ITR 4? So while deciding to the presumptive taxation, again we have to do a lot of exercise in deciding the which ITR is applicable even if our assessee is opting for the presumptive taxation. If he is an individual who is a director in a company, then he cannot fill ITR 4. If he has invested in unlisted equity share of his income tax is deferred on ESOP issued by eligible startup, he has agriculture income more than rupees 5,000 or he has any assets located outside India or any capital gain or loss from sale of land or building etc. is there, then he cannot opt for ITR 4 even if he is eligible for 44 AD. So he will have to go for ITR 3 if he is individual HUF. Person having commission income will have to file ITR 3. Non-resident cannot fill ITR 4. LLP company or AOP BOI trust society cannot fill ITR 4. Partnership firm not opting for presumptive taxation also cannot file ITR 4. So ITR 4, 5 has to be filed by the partnership firm and AOP. Who can opt for section 44A? Any assessee who owns not more than 10 goods carriage at any time during the previous year and engaged in plying, hiring or leasing of goods carriages has to declare minimum income of rupees 1,000 per ton of gross vehicle weight per month for every heavy goods vehicle, and for other than heavy goods vehicle, minimum of rupees 7,500 per month has to be declared. Books of account has to be maintained and audited if lower profit is declared. So if any of the person, even if having not more than 10 goods carriage, but he says that my earning is not of rupees 1,000 or more, then he will have to maintain the books of accounts and get them audited under section 44 AB. In case of a partnership firm, salary and interest is also separately allowable as per section 40 clause B. So in case of 44 AD and 44 ADA, remuneration and interest is not allowable to the partnership firm. But in case of 44 AE, remuneration and interest is allowable to the partnership firm out of the income declared as per 44 AE subsection 1. And what is the heavy goods vehicle? Heavy goods vehicle means any goods carriage the gross vehicle weight of which exceeds 12,000 kilogram means 12 ton. So if it is exceeding 12 ton, then it is covered under heavy goods vehicle. There arises a question that any doctor running nursing home also engages other doctors, whether this nursing home activity will be treated as business or profession. So there is a judgment of ITT Jodhpur in case of Sunil Chandak versus ITO. In this case, they have told that the decision factor would be that what is relevant and crucial is the nature of the services rendered by the doctors to the nursing home, whether facilitative or substantially so, or on independent standalone basis or substantially so. It is only in the latter case that the assessee's nursing home acquires the character of a business enterprise. Therefore, if the services of doctors are taken independently, standalone basis or substantially so by a nursing home being run by a doctor, such nursing home would be treated as carrying on the business. It will not be covered under profession. Whether any HUF running pathology is a business or profession, can penalty under section 271B be levied if HUF is running pathology and its gross receipt were exceeding limit specified for professional but not exceeding the limit specified for business under 44 AB. So there is a judgment of ITT Lucknow in case of Pramen Maheshwari HUF versus ITO. In this case, they have told that HUF is running CT scan center. The report of CT scan is given by a qualified doctor for which professional charges are paid to him. However, Karta of HUF is a qualified doctor, but he is not a radiologist and not providing any service to the assessee as a doctor. The assessee contended that in the case of CIT versus Upasana Hospital, Kerala High Court, it was held that when a medical practitioner, without confining himself to his conventional function of examining patient and prescribing medicine, establishes an X-ray plant and machinery for augmenting his professional work, it cannot be said that he has no profit motive in such adventure. That means he is carrying on a business activity. Therefore, ITIT Lucknow held that the activities are of business in nature and no profession. We therefore direct deletion of penalty under 271B of the Act. So this was the judgment of ITIT Lucknow. Whether sports person are liable under 194J, 44AA1 or 44AA subsection 2, 44AD or 44ADA or Rule 6F. Sports person is not specified for the purpose of section 44ADA or 44AA subsection 1. But for the purpose of section 194J, CBDT has notified the services in relation to the sports activities as professional services rendered by sports person, umpires, referee, coach, trainers, team physician and physiotherapist, event managers, commentator, anchor, and sports columnist. Therefore, such sports persons are not liable under 44 ADA and therefore it may be covered under 44 AD even if their TDS is deducted under section 194J. Who can opt for section 44A? All assessee, as I have already discussed, not more than 10 goods carriage. There is a relaxation for person engaged in transportation, plying, hiring, leasing of the goods carriages as per section 44AE subsection 5. The provisions of section 44AA subsection 2 and 44AB shall not apply if income is offered as per section 44AE subsection 1 and in computing the applicability of monetary limit for section 44AA subsection 2 and 44AB, the gross receipt or as the case may be, the income from said business shall be excluded. So if any of the person is engaged in plying, hiring, leasing goods carriages and offering his income under 44AE, his gross receipt will have to be excluded to determine the applicability of 44AB clause A. Audit under section 44AB if 44AE is not followed. So there, as per section 44AE subsection 7, an assessee who claims lower profit and gains than the profit and gain specified under 44AE. So if his income is less than specified under 44AE subsection 1 and 2, then he will have to keep and maintain books of account and get them audited under section 44AB clause C and get a report of chartered accountant under section 44AB. Definition as per Motor Vehicles Act. So while determining the income under 44AE, we have to see these definitions because some of the definitions are not there under section 44AE. There is a reference to Motor Vehicle Act. So as per Motor Vehicle Act, heavy goods vehicle means vehicle whose if its weight exceeds 12,000 kilogram, that is 12 ton. And what is the gross vehicle weight? Gross vehicle weight means in respect of any vehicle, the total weight of the vehicle and load certified and registered by the registering authority as permissible for that vehicle. So practically from where we will find this gross vehicle weight in case of the goods carriages, we will have to see the registration card of that vehicle. On the registration card, RTO authorities mention the gross vehicle weight GVW of that particular vehicle. So from there we can find out the gross vehicle weight, and on that basis we have to compute the income per thousand per ton of the truck. Then what is the goods carriage? Goods carriage means any motor vehicle constructed or adopted for use solely for the carriage of goods, or any motor vehicle not so constructed or adopted when used for carriage of the goods. So what is the motor vehicle? This is also defined here under Motor Vehicle Act. Then unladen weight, because under 44E there is also used the word unladen weight, but they have mentioned that gross vehicle weight or unladen weight as the case may be. So unladen weight is very rarely applicable because this unladen weight is applicable only for the tractor and road rollers, etc. So weight of a vehicle or trailer, including all equipment ordinarily used with the vehicle or trailer when working, but excluding the weight of a driver or attendant, and where alternate part and bodies are used, the unladen weight of the vehicle means the weight of the vehicle with the heaviest such alternative part or body. So whether the provisions of conditions of section 28 to 43C will be applicable to person opting for 44AD, 44ADA and 44AE? No, because these sections start with non-obstant clause, notwithstanding anything to the contrary contained in section 28 to 43C. Therefore, these sections will not have to be considered if income is offered under presumptive taxation, that is any allowance or expenses or deduction, etc. allowable or disallowable under section 30 to 43C shall not be considered except the income computed on the basis of percentage for section 44AD and 44ADA and income per month as per 44AE. In case of income offered under 44AD from assessment year 2017-18 and 44ADA by any partnership firm, salary and interest is not allowable as but under 44AE it is allowable. Whether provisions and condition of 2843C they are not applicable, then therefore if any assessee fails to make payment through check or RTGS for purchase or expenses, even though violation of section 48 subsection 3 or 48(3)(a), it will not attract. Because say for example any of the person is having turnover of rupees 2 crore and he has made payment in cash violating the conditions of 48 subsection 3. Every time he has made cash payment of 50,000 to the suppliers. So whether he will attract 48(3) while computing 44AD income? No, because it is mentioned notwithstanding anything contained in 28 to 43C. So 48(3) is covered under 28 to 43C. So there will not be any violation of 48(3). It will not attract only if assessee fails to follow the TDS provisions. But TDS provision, even if TDS provisions are not followed, even though disallowance under section 40A1 or 40A1A will not be there, but interest under section 201 subsection 1 capital A, 267 and or penalty under 271C and 271CA of the TDS TCS provision may be applicable. So even if there is no disallowance, but the penalty may attract, and even if 48.3 is not applicable, but we should always advise to follow, because may be possible that in the next year the turnover of the assessee cross more than 3 crore, so he will have to face some problem. So always we may advise, this is only in case of the situation where due to inadvertent error the assessee had made payment in cash. Whether deduction or allowance under section 30 to 38 will also be available separately to person opting for 44AD, 44AD or 44AE. No. For the purpose of 44AD, in this, any deduction allowable under provision of 30 to 38 shall be deemed to have been already given full effect, and no further deduction shall be allowed under this section. So, say for example, any assessee say that I am offering income under 44A and also allow me depreciation on the goods carried. So depreciation will not be allowable, because all the deduction under 30 to 38 will be deemed to have been already given full effect. Then when our assessee are following the presumptive taxation, even though many of the cases of 44AD and 44ADA, etc., are taken up in scrutiny by the income tax department. So when the case go into the scrutiny, the department find out various mistakes committed by the assessee and various things. So many cases have to go to even appeal or high court, even if following the presumptive taxation. So there are some of the cases I would like to discuss of some courts. So there is judgment of Honorable Punjab and Haryana High Court in case of CIT versus Surinder Pal Anand. So this is a very landmark judgment, 192 Taxment 264, in which it has been held that Section 44 AD of the Act was inserted by Finance Act 1994. Section 44 AD clearly provides that where an assessee is engaged in the business of civil construction or supply of labor for civil construction, because earlier to assessment year 2011-12, 44 AD was applicable only to civil contractors. So this is the case pertaining to that year. Income shall be estimated at 8% of the gross receipt paid or payable to the assessee in the previous year on account of such business, or a sum higher than the aforesaid sum as may be declared by the assessee in his return. The income is to be deemed to be profit and gain. So if once, further Honorable High Court stated that once under the special provision, exemption from maintaining of books of account has been provided, and presumptive tax rate at the rate of 8% of the gross receipt itself is the basis for determining the taxable income, the assessee was not under any obligation to explain individual entry of cash deposit in the bank unless such entry had no nexus with the gross receipt. If any of the cash deposit or any of the transactions in the bank account of the assessee are related to the business, then he is not required to explain each and every entry in the passbook. The stand of the assessee before CIT appeal and tribunal that the said amount of rupees 14,95,000 was on account of business receipt had been accepted. The learned DR with reference to any material on record could not show that cash deposit amounting to 14,95,000 were unexplained or undisclosed income of the assessee. In view of the above position, Honorable High Court stated that we are unable to hold that any substantial question of law arises in this appeal. Therefore, appeal of the revenue was dismissed. Section 69C. So, whether any addition under 69C can be made in case of the assessee covered under 44 AD or ADA. The Chandigarh bench of tribunal in the case of Nandlal Popli versus DCIT held that we have heard the learned representative of both the parties peruse the finding of the authorities below and consider the material available on record. The issue to be decided by us is whether accepting the case of the assessee is taxable under presumptive taxation as provided under 44 AD of the Act. The assessing officer can make addition under 69C of the Act, making the cash flow statement provided by the assessee the basis of his addition. So many times we have seen that during the assessment proceeding, even if the assessee has opted for 44 AD, the assessing officer are asking for the cash flow statement, because we are not maintaining books of account, but they ask for kindly provide the cash flow. So on the basis of cash flow, the assessing officer desired that there should be addition under 69C. So Honorable ITAT stated that Section 44 AD of the Act reads as under. The provisions of the above section are quite unambiguous to the effect that in case of an eligible business based on gross receipt of total turnover, the income under the head profit and gains of business shall be deemed to be at the rate of 8% or any higher amount. The first important term here is deemed to be, which proves that in such cases there is no income to the extent of such percentage. However, to the extent income is deemed. So actually there may be situation there is not the income up to 8%. Even income is very much loss, very much less. But assessee is offering income 8%. So Honorable ITAT told that there is no income to the extent of such percentage. However, to the extent income is deemed, it is undisputed that deemed means presuming the existence of something which actually is not. Therefore, it is quite clear that though for the purpose of levy of income tax at the rate of 8% or more may be considered as income, but actually this is not. This can be considered as income, but actually this is not the actual income of the assessee. This is also purport of all provisions relating to presumptive taxation. Therefore, putting the above analysis in converse, it can be easily inferred that same is also with the expenditure. For if 8% of the gross receipt are deemed income of the assessee, the remaining 92% are also deemed expenditure of the assessee. So meaning thereby that actual expenditure may not be 92%. So many times there may be situation that assessee has not spent even up to 92%. He might have spent only 85%. So whether remaining 7% will be treated as income, can the AO treat this income as 7% as his income? No. Only for the purpose of taxation it is considered to be so. To take it further, it can be said that expenditure may be less than 92%, or it may be so, or it may be more than 92% of the gross receipt. So from the combined reading of subsection 1 and subsection 5, it is apparent that obligation to maintain books of account and get them audited is only on the assessee who opts to claim the income being less than 8% of the gross receipt. Therefore, no such addition can be made under section 69C. Then section 69A addition can be made. ITT Cochin in the case of Thomas Epan Alpuja versus ITO, they have stated that if the income component is estimated, how the expenditure component on the basis of said income can be considered to have been actually incurred. Because if income is deemed, then how expenditure can be treated as actually incurred. Therefore, if income is deemed, then expenditure is also deemed, not actually incurred. So in this case, this has been held. So even if assessee is incurred less expenditure, even though no addition can be made under section 69A, even if say for in this case it has been mentioned that there is credit of 94 lakh in his account, he has explained only 66 lakh, so remaining 27 lakh is unexplained. So Honorable ITAT has held that no such addition can be made under section 69A. ITT Cochin, this is the summary. Turnover more than upper limit of 44 AD. Many times there is situation that the turnover is more than upper limit of the 44 AD. Say for example, turnover is 5 crore. Even though can the assessee opt for 44 AD? No. As per income tax provision, 44 AD is applicable only up to turnover of rupees 3 crore with certain condition, otherwise 2 crore. But there is judgment of ITT Bangalore in case of Chittappa Karthik. In this ITT, it was observed that during the year under consideration, the turnover of the assessee was 1 crore 32 lakh, against which the assessee claimed direct expenses of rupees 1.2 crore and indirect expenses of 2.4 lakh. During the course of hearing, the AO called for furnishing documentary evidences in respect of direct and indirect expenses. The assessee stated that he has not maintained any books of account and net income from civil contract work has been estimated and offered to tax. ITT observed that the assessee is required to maintain books of account as presumptive taxation scheme is not applicable if turnover is exceeding 1 crore. Given this, whether the lower authorities are justified in estimating the profit more than 40% is to be looked into. So, in this case, ITAT Bangalore referred to the judgment of Delhi High Court. This is a very landmark judgment of Delhi High Court in case of CIT versus Subodh Gupta, 2015, 54 taxman.com, 343 Delhi. In this, they have held that the learned counsel for the revenue submits that Section 44 AD has no application as the turnover of the respondent assessee was 18 crore. And the said section prescribes a thumb rule or presumptive net profit rate if turnover of an assessee is less than 40 lakh. So at the time limit was 40 lakh. This is correct and has been noticed by CIT appeal and tribunal. The difficulty in the present case is that assessing officer did not conduct any inquiry and ascertain the net profit rate of other comparable contractors. On the other hand, he disallowed expenditure of 10 crore, resulting in abnormal GP rate of 59%, which should not be accepted. The effect thereof was that 70% of expenditure on account of purchase worth 10 crore out of total purchase of 14 crore were disallowed. The appellate authority have taken a holistic and broader view and held that as the books of account had not been produced and were not regularly maintained, the book results should be rejected. We agree with the counsel for the revenue that the assertion that books of accounts were stolen and hidden had a hidden motive and assertion is rather unbelievable. The respondent assessee therefore must suffer adverse consequences. The only question is whether addition of 1.3 crore to the declared income is adequate or a higher addition would be justified. As far as total turnover is concerned, the appellate authority are right in holding that figure of 18 crore cannot be disputed as the assessee was only doing development work for Greater Noida Authority. The total turnover is also supported by the TDS certificate. The quantum of turnover was not adversely commented upon by the AO. In view of the aforesaid position, we wanted the counsel for the revenue to ascertain the gross profit or net profit rate declared and accepted by the AO in case of other contractors engaged in similar work. We wanted ascertainment of this aspect as the Council of the Revenue had submitted that net profit at 8% was inadequate and low and a higher profit rate should be attributed. The Council for the Revenue was required to ascertain the said aspect. It is stated that the assessing officer has not given any comments in this regard. Noticeably, counsel for the assessee had earlier produced before us a copy of the assessment order relating to the assessment year 2010-11, wherein AO himself had applied net profit rate of 8% on contract receipt of 6.6 crore and net profit rate at the rate of 3% on supply receipt of 7 crore. As per the said order, the total receipts were to the tune of rupees 14 crore. In the present assessment year, the total turnover is about 18 crore. In these circumstances, we are not inclined to accept the prayer of the counsel for the revenue that an order of remand may be passed. The assessing officer in the subsequent year has accepted the figure of 8% net profit, which is figure which has been adopted by the appellate authorities in the present case. Then revenue relied on the judgment of CIT versus Sopti Construction, which was also overruled by the bench. And then ITT held that considering the judicial precedents and overall facts and circumstances of the case, we are of the considered view that it would be fair and proper that income from contract business of the assessee be estimated at 8% of the gross receipt. The AO is directly directed accordingly. The appeal of the assessee is allowed. So in this case, the turnover was 18 crore, even though he was not maintaining books of account. He told that books of accounts are lost or so. But one more thing we should keep in mind that we cannot advise our client that you may not maintain books of account even if your turnover is more than 1 crore. This is only some exceptional conditions. Otherwise, every client, if he is liable for audit and if he is liable for maintaining books of accounts as per 44AA subsection 2, he must compulsorily maintain. Otherwise, there may be, because Facts of every case are different. This is only for guiding us if our client has committed mistake unknowingly or inadvertently, or there is some unforeseen circumstances like fire in the industry, or the books have been actually lost, or whatsoever his soft data has been lost or missed. So whether 8% and peak credit can be simultaneously opted by the AO, ITT Chennai in case of Sri Devi Ravi Chennai. It has been held that if the assessee is covered under 44 AD, then only 8% can be levied, but peak credit cannot simultaneously be used. So there cannot be any addition under section 68 or 69, and peak credit cannot be added. Turnover or gross receipt in case of shares, securities, and derivatives, as per the exposure draft issued by ICI. As our respected Piyush Chajarji, DTC chairman, has told that I would refer some because ICI guidance note already exposure draft has been issued, and the time limit for suggestions are also closed on 20th July. So as per the guidance note, what is the turnover in case of derivative, futures, and option? The total of favorable and unfavorable differences in case of squared of transaction shall be taken as the turnover. Premium received on sale of option is also to be included in the turnover. However, where the premium received is included for determining net profit for transactions, then such net profit should not separately be included. In respect of any reverse trade entered, the difference thereon should also form part of the turnover. In case of an open position as at the end of the financial year, the trades which are not squared off during the same financial year, the turnover arising from the said transaction should be considered in the financial year when the transaction has been actually squared off. In case of delivery-based settlement in derivative transaction, the difference between the trade price and settlement price shall be considered as turnover. Further, in the hands of the transferor of underlying asset, the entire sale value shall be considered as business turnover, where the underlying asset is held as stock in trade. So, if we are doing the audit in case of derivative, future, and option, this is the way how to calculate the turnover. If the aggregate turnover based on this is not more than 3 crore, we may also take it to the 44 AD also. This is my opinion. If aggregate turnover is aggregate of the favorable and unfavorable is not more than 3 crore, in my opinion, the assessee can opt for 44 AD. Turnover in case of delivery-based transaction. As per para 5.11c of exposure draft ICI tax audit guidance note, delivery-based transactions where the transaction for the purchase or sale of any commodity including stock and share is delivery-based, whether intended or by default, the total value of the sales is to be considered as turnover. There is a landmark judgment of Gujarat High Court. However, it is related to Section 44F because earlier to assessment year 2011-12, 44AF was applicable. From 2011-12, 44AD is there in place of 44AF. Honorable Gujarat High Court, in case of CIT versus Pradeep Shantilal Patel, held that where assessee admitted that cash deposit pertained to his retail business, but details and nature of business were not forthcoming from record. Considering total turnover of the assessee, net income had to be determined under Section 44F. In this case, returned income was 90,000, cash deposit in saving account was rupees 35 lakh. Assessee failed to furnish name and address of the suppliers in respect of iron scrap business. Assessee was not even registered under Gujarat VAT Act. AO added same as income from undisclosed sources. And in his bank account, the amounts deposited were used on the same day for clearing of the check. So as and when cash is deposited, the assessee issued the check to the suppliers. And every day his bank balance was never exceeding 1,000 in this assessee, even though CITA restricted the addition of rupees 35 lakh to rupees 1.8 lakh under Section 44F. Revenue filed appeal before ITAT. ITAT confirmed the order of CITA. Then revenue filed appeal before High Court. Honorable High Court dismissed the appeal of the revenue because in case if there is presumptive taxation and the deposits are relating to business, then no separate addition can be made. Whether the passbook is the books of account, because many times in case of presumptive taxation assessment, when assessment are done of the assessee, assessing officer are making additions under section 68 of the act, and section 115 BE is also applied in recent years. So there is a honorable Bombay High Court judgment in case of CIT versus Bhaichand Gandhi, 141 ITR 67. In this case, Honorable High Court upholding the decision of tribunal concluded that bank passbook does not constitute books as envisaged under section 68 of the Act. Cash credit for the previous year shown in the assessee's bank passbook issued to him by the bank but not shown in the cash book maintained by him for that year does not fall within the ambit of section 68 of the Income Tax Act, and as such the sum so credited is not chargeable to income tax as the income of the assessee for that previous year. High Court stated that the passbook supplied by the bank to its constituent is only a copy of the constituent's account in the books maintained by the bank. It is not as if the passbook is maintained by the bank as the agent of the constituent, nor can it be said that passbook is maintained by the bank under instruction of the constituent. In view of this, the tribunal was, with respect, justified in holding that passbook supplied by the bank to the assessee in the present case could not be regarded as books of the assessee, that is, a book maintained by the assessee or under his instruction. In our view, tribunal was justified in the conclusion at which it arrived. Where assessee was engaged in business and required to maintain books of account, not doing so would not disentitle department from invoking section 68. So there is another judgment of Bombay High Court. Whether business includes profession or vocation. So there is some thing which is important, because as per section 44 AB clause A, if turnover in case of the business exceed 1 crore, assessee is liable for audit. As per section 44 AB clause B, if gross receipt in profession exceeds rupees 50 lakh, assessee is liable for audit. So there the word used is only the profession. And under section 44 ADA, the word used is specified profession. 44 ADA came into existence from the assessment year 2017-18, whereas section 44 AB clause A and B are since 1984. So when 44 ADA was introduced from assessment year 2017-18, I think 44 AB clause B was skipped to be amended because there the word used is only the profession. So if any of the persons, say for example, he is a photographer, he is a profession. He is a professional, because as per definition given in the Income Tax Act, profession includes vocation also. So if he is only a profession but not a specified professional, but as per section 44 AB clause B, he is required to get his books of accounts audited as per section 44 AB clause B. But there is a judgment of ITAT Pune in the case of Gera Development Private Limited. In that judgment, ITAT referred to the judgment of Honorable Supreme Court in the case of Barendra Prasad Rai versus ITO. The Honorable Apex Court in this said clause, while explaining the meaning of expression business connection as used under section 9, has also in an explicit manner held that business does not necessarily mean trade or manufacturing only. It includes within its scope profession, vocation, and calling. So this is the judgment. However, I am sure that when the new Income Tax Bill 2025 will again be finalized, this difference between profession and specified profession will certainly be taken care of. No other addition if 44 AD turnover is accepted by the AO. So there is judgment of Bhaskar Joseph, as I have also discussed various judgment. If they AO himself has opted and adopted, accepted the 44 AD, then no separate addition can be made regarding business receipts or deposits or any expenditure or short expenditure. There is a judgment of Allahabad High Court in case of Section 44A. In this case, the assessee has maintained the capital account also, books of account also, they have made the addition. So, Honorable Allahabad High Court had told that if the assessee is covered under 44A, then no separate addition can be made, even if from the books of account it is reflecting that the capital account has been increased by 29 lakh, but no separate addition can be made in case of presumptive taxation. So if income is below taxable, say for example, the turnover of the assessee is rupees 40 lakh and his 8% amount is 3.2 lakh. So if his income is below taxable, or say for example, his gross receipt is 30 lakh and 8% is 2.4 lakh, so he is not liable for income tax. But whether he is required to maintain books of account, but if he is not following 44 AD, he is required to maintain books of accounts. And even if his turnover, his income is not liable for tax, but there are certain conditions as specified under 7th proviso to section 139(1). If he is covered under these provisions, then if his income is not taxable, even though he is required to file his income tax return. So these are the conditions. So we must take care of these also while filing the return of income. So anyway, we always track our clients who are filing regularly returns, but we must also educate the persons who are not filing return, but they are covered under this 7th provision. Then we must educate them to file their returns of income. Then under section 115 BAC, the reporting in ITR form from this year has been changed. Up to assessment year 24-25 in ITR, there was only this small requirement regarding 115 BSc opt-in or opt-out. But from the assessment year 2025-26, there are so many options A, B, C, and A1, B1, and C1 has to be furnished. So everyone will have to take care. And if any of the assessee has furnished Form number 10 IEA in the assessment year 2024-25 for opt-out of the 44 opt-out of 115 BSc, then again he is not required to file form number 10 IEA for any subsequent year. Only when he wants to opt out, when he wants to opt in the default system of 115 BSc, then he will have to again furnish form 10 IEA. Otherwise, every year this form is not required. And this form has to be furnished before the due date specified under section 139 subsection 1. Then we must also take it. So filing of ITR of presumptive taxation is not so easy. Before filing the returns of income, we must have to verify the AIS and TIS and 26S of the assessee. And we must also verify the interest from saving account, fixed deposit, recurring deposit, also sale of securities, whether long-term or short-term, quantity and rate at which shares have been sold, total sale consideration have to be verified to correctly calculate the capital gain of the assessee. And in case of many times in the AIS, TIS, there are duplicacy of the information from NSDL or from other reporting authorities. Many of the share transactions are or mutual fund transactions are duplicate reported. So we must take care this duplicacy should not be there in case of say even if share transaction business is opting for 44 AD or so. So we must verify from the actual record of the assessee, and also ensure that any income is not left to be included in the ITR. Further, in respect of TDS credit claimed by the assessee, proper entry should be done for the corresponding income offered in the return of income and under which head such income is being offered. Corresponding TDS section in schedule TDS of ITR form to avoid any defective return notices. So from this assessment year 2025-26, there is also a column in the ITR under which we are required to mention the TDS section under which the TDS has been deducted by the deductor. So many times the TDS is deducted under 194C or 194J, even though assessee are filing the ITR to by showing their business income under that income from other sources. So from this current assessment year, the department may issue notices to such assessee if they are not offering their income under the correct head, even if TDS has been deducted correctly by the deductor, showing it is under the business head TDS sections. So return of income in case of audit assessee to verify the details in ITR with the tax audit report. So if we are filing the ITR of any of the assessee based on the tax audit report, then we have to also verify the 3CA, 3CD also. And based on that information regarding disallowance, etc., have to be mentioned in the ITR form. And we should also verify that there should not be any double addition due to our inadvertent error. Or if there is any reporting in the 3CD, we should confirm from the assessee first, then we should make any addition in the ITR form. E-verification of ITR, now tax audit assessee can also e-verify their ITR through Aadhaar OTP, and it has to be done within 30 days. So there are some new business code in the ITR form. The new ITR utility is released. So these are the new ITR codes in ITR form. First is the commission agent Kacha Artiya. So in the guidance note issued by the Institute of Chartered Accountant of India for the purpose of section 44AB, there is already details mentioned regarding the commission agent being Kacha Artiya and Pakka Artiya. So if any of the person who is Pakka Artiya, the tax treatment of audit and reporting of income are separate as compared to the commission agent who is Kacha Artiya. So now this thing has been taken care of by the CBDT. So they have mentioned here the word Kacha Artiya. So in case of Kacha Artiya, only commission is required to be shown. And any of the amount credited in his bank account is not subjected to audit or not subjected to presumptive taxation, even if his turnover in bank account may be exceeding rupees 1 crore or 4 crore whatsoever, because he is the Kacha Artiya. So generally in case of Kacha Artiya, there is no credit also in his bank account. So maybe possible the department will track that if he is Kacha Artiya, then how he is receiving the money in his bank account, because sometimes only Pakka Artiya can receive the money in his bank account. This is my view. So speculative trading. So whether any person is engaged in speculative trading intraday transactions, so that there is also separate code for that. In case of future and option trading in derivatives, this is also, and delivery based transaction, there is separate code mentioned in the ITR form. So in conclusion, I would like to say that even if the taxpayer has opted for the presumptive taxation, even though various provisions which are out of section 28 to 43C are to be taken care of and to be followed. Otherwise, any violation may result in tax penalty, etc., against the assessee. So we must take care. The presumptive taxation is also not so easy. So please check 26AS, AS, TS, and also check at the fact. So this is very important thing that also please check 26AS, AIS, TIS at the fag end of the time limit to file the revised return for relevant assessment year. Say for example, for the assessment year 2025-26, you have filed return of your client on 15th September 2025. Even though I would advise that please check the 26AS, AIS on or before 31st December 25 again after filing the return, because deductors might have furnished revised or correction TDS, TCS statement or any new information in 26QB, 26QC, QD, etc. might have been updated or modified by the deductor, or any new information might have been there due to delayed filing of statement of financial transaction or correction filed by the reporting authority in SFT. Otherwise, only option thereafter is to file the updated return. If you will not verify up to 31st December, thereafter department may issue the notices of mismatch in your ITR, and thereafter you have only the option to file the update return with paying the extra 50, 60 or 70% of the tax and interest due. So please check and compile income from all bank account transaction and property transaction and share transaction and GST data, etc. before filing of the ITR. And we must also check that if any of our client who is opting for presumptive taxation, and even if he is registered under GST, his GST data should be verified. And many of the taxpayers are receiving money online through Paytm or online wallet system, various wallet systems. So many times, if the money is kept by the assessee in wallet, then that money does not go directly to your bank account, to the bank account of the taxpayer. And because that money has been again used from the wallet for expenditure, so assessee might have also forgotten to report the transaction in GST department, and he may also forgot to report it in his ITR, but subsequently income tax department may issue the notice based on Paytm reporting or etc. online wallet system. So we must also check the that our client is receiving any money through other mode even out of the bank account. So these things I would like to I had discussed regarding presumptive taxation. So thanks a lot to all of you for giving me patient hearing. And now I hand over the mic to dear Krishnaji. And thanks to our respected chairman DTC Piyush Chhajerji and vice chairman Vishnu Agarwalji.
Uh, Thank you so much, Rajesh sir, for your wonderful session with a wonderful presentation with various case laws and judgments. During the session, I have personally received various messages from the members that from where we can get this presentation, and also in the chat box, we were receiving various query from the members who are watching online that how we can get the presentation. So, to all the members, to all the audience, the presentation and the video will be uploaded on the ICI TV, the official site of our ICI. You can download the presentation from there, and also you can check the webinar over there. If you face any issue, you can coordinate with DTC committee, or you can coordinate with any of the coordinator in the ICI. So during the session, we have received various query, and before session also we have come with approx 100 plus query from the members. So I have consolidated some major big queries, common queries which the members are facing. So we can discuss that point by point in our last 30 minutes of the session. So firstly, some common queries is like that. Okay, if a person is specified under section 44 ADA, is he eligible to file his return under section 44 AD if he want to do so,
I think that
and vice versa?
yes, I think the querist wants to ask that if any of the assessee is covered under 44 AD, can he simultaneously opt for 44 AD? So
Correct.
ITR utility allows to simultaneously, however, as per the Income Tax Act 44 AD subsection 6 debars the person himself, not the business. So
Okay.
as per 44 AD6, it is not allowed, but income tax utility is allowing. So there may, because in my opinion, the income tax portal and income tax utility is maybe the replica of the Income Tax Act, the intention of the income tax. So if they are allowing, we may
We
try,
can.
subject to litigation if any arise in future.
Okay. And similar queries like that, if a person is not specified to opt for 44 AD, can he voluntarily take 44 ADA?
No problem, because he is declaring his income more than
If
50%.
unqualified
Ah,
professionals or accountant
I think
is
department will not prevent anyone
okay,
if he's
because
declaring income more, if he is declaring, however, he is doing wrong. As per law, he is
ha-
doing wrong. But if he is declaring more income, I think no problem. Only department will replace the 44 ADA with 44 AD while assessing. But income will
correct,
be
correct.
affected.
Okay. And if we opt for 44 AD, so if is the assessee having the option to declare income more than 50%, or it's mandatory to declare 50% only?
Under 44AD, 44ADA, and 44AE, it is already mentioned that assessee has to declare the minimum income, but he may declare any some claim to have been earned higher than that. So he may
Okay.
declare higher than income, higher income.
Okay. Someone are actually having income of 70-80%, so they can
No, they can
declare.
declare. No, they
Yes,
can
yes.
declare.
Okay. Sir, we all know one new section has been incorporated, 194T, TDS on remuneration to partners. Uh, is that section is applicable in case of a person taking presumptive taxation's benefit?
Yes, yes, yes. Even if presumptive taxation is opted, even if their salary and remuneration is not allowable under 44AD, even though this has to be followed as per the TDS provisions.
Okay. Okay. One small question, sir. In case
Because
of
under 44AD and 44ADA, there is only condition that notwithstanding anything contained in section 28 to 43C. So that does not prevent 194T from applicable.
yes, TDS sections are not in that. One small question: in if a company incur loss, is tax audit is optional or mandatory
So
in case of loss?
in case of company, tax audit is only required when income, the gross turnover or receipt is more than 1 crore in case of the company. And company is always never subjected to presumptive taxation under 44AD
In case
and
of loss, is
44ADA.
tax audit mandatory? The
No,
question is
no,
like that.
no, no, no. In case of loss, because if a turnover is more
E-
than 1 crore, then tax audit is compulsory. So
Even
turnover
though the
and
law,
gross,
even though the company is having a loss.
even if loss
Okay.
turnover and gross receipt is exceeding 1 crore, or if the company is opting for 44A. In case of
A.
44A, if they are not following the conditions of 44A, then that company is required to get books accounts audited if there is loss. Only in case of goods carries this condition. Otherwise, in case of loss, no such requirement.
Okay.
Only
Okay.
44AB clause A have to be seen.
सर कुछ न्यू बिजनेस कोड्स इंकॉर्पोरेट हुए हैं ये स्कीम्स में. सो एक क्वेश्चन आया है सोशल मीडिया इन्फ्लुएंसर्स के लिए. The utility has given a new code. So is it mandatory for them to go for 44AD only, or they can opt for 44ADA also, since they are not being specified under the specified
So,
professionals?
in my opinion, for the social media influencer are not the specified professional covered
Correct.
under 44 ADA. So they may opt for 44 AD in my opinion.
Okay. Next, there is a question that in assessment year 24-25, means last year, someone has taken 44AD. But in current year, assessment year 25-26, since his or her turnover increased by from 2 crores, so he do not have the option to opt for 44AD voluntarily. So is it mandatory for them to get their accounts audited, even though their turnover is below 10 crore and no cash transactions are there?
If the condition of 10 crore is separately applicable, under this 10 crore condition, we have not to see the 44 AD or etc. So if his turnover is up to 10 crore and all receipts and payments 5% in cash is not exceeding
Less than
5%,
5%.
then he can opt for without audit. So 44AD subsection 4 and 5 will not be applicable
Okay, okay, okay.
because this
So
is
some,
overriding.
yeah, there are some confusion that if you are breaking that chain of 44AD, you are opting out of 44AD, then it's mandatory for
No,
you to do audits.
because of condition of the section,
Because of condition of the section, we are not eligible to take that.
he is not
Okay.
required to get audited.
Whether fees received as arbitrator can be offered under section 44ADA.
If arbitrator, he is a legal, because arbitration, if he is acting as a legal advisor, he is in the advocate practice or etc. law profession, then 44 ADA will have to be shown.
Okay. Can stock trading professional take the benefit of this scheme?
Yes, if any of the person is covered in the share transaction, he is covered in the share business, then he can opt for 44 AD.
Correct. A person is having income from salary, capital gain on share, and business income from future. Can he opt for 44AD?
Yes, in my opinion, if his total of positive and negatives of future and option and derivative is not more than 3 crore, then he can opt for 44AD, in my opinion.
Okay. Respected sir, assessee is having salary income and commission income for the extent to the extent of 2 lakh. TDS deducted under section 194H. Whether this commission amount can be disclosed under 44AD or should prepare profit and loss and balance sheet and disclose business income.
No. Because his gross commission is not more than 25 lakh per, and his if his income is exceeding 2.5 lakh, then he will have to fill up the P&L balance sheet. So he will have be required to maintain books of account. He cannot opt for 44AD.
Okay. So similar question related to this provision only. Some assessee is having only 5 to 10,000 of commission income, and other income is purely from his business and profession, and regularly he's showing his income under 44AD only. So can he show that commission income under other income and file is written under AD?
Actually, as per the Income Tax Act section 44AD subsection 6, any person having commission income cannot opt for 44AD. But Income Tax Portal allows. So if Income Tax
Yes.
Portal allows, he may follow.
Okay, correct, correct. Because due to some small amount of commission, the main benefit of this section,
Many of the person are filing in the returns are also being processed.
yes, yes, yes. Consider difference. Is there any limit to extra? After completion of 5 year, according to section 44AD, in sixth year, what happen if eligible assessee with eligible business does not show his income with bank turnover of 2 crore according to 44AD?
So under section 44AD, it is mentioned 44AD subsection 4 that if any of the person in which he has offered his income under 44AD, he opt out of 44AD in any of the subsequent 5 years. So in my opinion, even in sixth or seventh year, if he has opted out, then up to next 5 year, he cannot opt in for 44AD. However, language of 44AD subsection 4 is much confusing, but I would advise that if any of the assessee has opted for 44AD, then it cannot be assumed that in the sixth year or seventh year, he can opt out of 44AD. Whenever he
Correct,
has
correct.
opted out, up to subsequent 5 year, he cannot opt in 44AD.
Okay, so next question is, sir, as a profession like a CA, can he show his share of profit from a partnership from an LLP and take benefit of ADA
No, as
on
I
that?
have told that there is judgment of Madras High Court and Bombay High Court, which says that income from partnership firm is not the income of the business of the SSC. Business is being carried out by the partnership firm. He is only earning the remuneration and interest. But even if it is income from profit and gain of business or profession, but it is not business of the SSC. So as per Bombay High Court, Madras High Court, he cannot opt for 44 ADA or 44 AD for this income.
Okay, okay. One small question related to ADA. If someone is showing profit less than 50% and filing proper P&L balance sheet ITR 3, is it mandatory for them to get their books of accounts audited?
Yes, yes, yes. Under section 44 ADA, as I have told, that there is no option except to get books of accounts audited if income is less than 50%.
Okay, whether his turnover is below the threshold limit or
Because
no
the
other conditions.
option available under section 44 AD is not there under 44 ADA.
Okay, correct, correct. Sorry, uh, an assessee is having a mixture of income. Uh, 15 to 20 lakh is from profession and 20 lakh from business. So, can you opt for AD and ADA simultaneously?
Yes, as I have told that if utility and portal allowing, you can opt. But if income tax act does not allow.
Okay, a CA in practice can consider his remuneration. Okay, this we have covered. CA firm provides service of bookkeeping. Uh, will a CA firm providing service of bookkeeping and taxation and not having presumption permission to issue audit report or certification work get benefit of provision of section 44 ADA?
Please again repeat that question.
Means a CA firm is providing a bookkeeping and taxation services and not giving any audit report or certification services. So are they eligible to opt for 44 ADA?
No, I think he wants to. If he wants, then he can opt because he's offering higher income.
Higher income.
He can opt, but the bookkeeping is whether allowed by ICI or as per code of conduct or code of ethics, it is separate question. Because he can offer taxation services, but in my opinion, as per ICI, he cannot offer bookkeeping services.
Correct. Suppose the business file ITR based on presumptive income 44 AD declare profit of 8%, but actual profit are around 90% due to the nature of business. Is the excess money with the proprietor consider white money or there are undisclosed income? Have there been any judgment related to such situation?
Still, up to now, some judgments are available which says that it is not compulsory that there should be 92% of the expenditure. But any of the assessee should not use this section 44 AD or 44 ADA as a shortcut to do his black money as a white. He is spending his expenditure in cash and keeping the money in his bank account. So, if the assessing officer finds something adverse,
Then it may be
because
problematic.
it depends upon every case to case. If what is the intention of the assessee and what is the reason that if he is expending case and the assessing officer finds that he has spent money out of this for which no source is available, then he may make addition even if 44 AD is opted. However, because every judgment cannot be taken as a shelter.
Correct. Whether a specified person opt for 44 AD and show 6% or 8% profit.
Again, please.
Whether a specified person who is eligible to opt for 44 ADA, but he wants to opt for AD to show less profit.
Never. If means he wants to opt for 44 AD.
Yes.
So
Our department may come to know he's a specified person or not. He can show other income or he can show other services business.
So on the basis of TDS, department may come to know if TDS is deducted under 194G, he is offering income under 44 AD, then department may trace.
Correct, correct. Same similar question related to 194J, sir. If suppose TDS has been deducted under section 194J, so is it mandatory to show as a profession or we can show under 44 AD or we can show under business?
Yes, as I have already discussed in my slides that if TDS is wrongly deducted under 194J, but actually the income of the assessee is covered under business income, then he has to offer his income under the head business income. If the scrutiny notice is received, he may reply that I am not a specified professional covered under 44 ADA.
Okay. So if a person is not a specified professional covered under ADA, he can offer an income received under section 194J as a business income and
Yes,
file his
under
return.
44 AD. Yes.
Okay. Can department raise question if a person file return under ADA showing his gross collection as rupees 30 lakh, declare profit 15 lakh. However, during the year, his investment goes up by 25 lakh. So can department ask if your profit was 15 lakh, how the investment increased 25 lakh?
Department may ask if there is more investment, the source of investment department can ask.
Okay. But how much income? Mr. X run a consultancy for applying for permanent resident visas. Is the business eligible for 4480?
Yes, because he is not a specified professional.
Okay. Difference between total turnover and other question are similar to total turnover 2.9, total sale 100% sale by banking loan. A doctor running a nursing home hospital in his individual capacity and also render medical consultancy services. Will he be eligible to offer the income from profession for his personal service and under section 44 AD for his hospital income?
Yes, I had told that 4480 does not allow so, but portal allows, so he can do up to as and when the utility will stop, then we will have to see.
TDS under section 194 BA, rupees 30 lakh appearing in 26 AS of 44 AD SSE. Can he file ITR 4? If not, if he forgery credit for TDS of 30 lakh in ITR, then can he file ITR 4? Thank you for the reply. Okay, so we have also not understood this question. Can an individual delay in purchasing large land? Okay. Can a CA firm declare a profit of less than 50% and get his books of accounts audited?
Yes, if their gross
Under
income is not exceeding 50 lakh, they can declare less profit
okay.
and get books accounts audited.
And if gross profit is more than 50 lakhs, then it's mandatory.
Gross receipt is more than 50 lakh, then up to 75 lakh. If their gross receipt in cash is not exceeding 5%, they up to 75 lakh. They can opt for 44 ADA.
ADA. Especially running metro. So there is one question. Section 44 AD1 use word eligible assessee and section 44 ADA4 use word declares. So can we say that even if we fall under the definition of eligible assessee and eligible business, will it be at the option of the person to choose section AD and to declare profit 6 or 8%? The case may be, or he deemed to have earned 6 or 8% profit unless he gets his books of accounts audited. Example, suppose my turnover is of 60 lakh in cash and I want to claim a loss of 2 lakh without getting my books of accounts audited. Can I do so?
Yes, sir. If his turnover is not exceeding 1 crore and in earlier 5 year he has not opted for 44 AD, then he can fill ITR 3 by furnishing the P&L balance sheet in ITR form. He can declare loss without getting books audited. If he has not done his books of account audited in earlier, he has not opted 44 AD
Opted for
any of the
AD.
5 year, any of the preceding 5.
So the chain of section 44 AD of 5 year is completed in last assessment year, means assessment year 24-25. So in during current year, can we directly file our return under ITR 3 and show less profit without books of accounts auditing if our turnover is less than 1 crore?
No,
Okay.
in my opinion.
Sir, one client is offering event management services and the party has deducted TDS under section 194J. So how we can show in 44 AD
He may declare under 44 AD because event management is not a specified profession.
specified business? So he will have to declare as a business and or
Yes.
directly he can without filing ITR means P&L balance sheet he can show directly in AD.
AD.
An assessee run a petrol pump and has a turnover say 40 crore. Get his petrol pump accounts audited and file ITR accordingly. It is so running a transport business of tanker for the funeral company under the same firm, same GST and same PAN number. Can the assessee offer 44 AE for transport business
Yes,
and
yes,
report
yes.
okay separately?
Because 44A subsection 5 allows him.
Can a real estate agent earning commission income so as a business income and file ITR 3 if his commission income is less than 1 crore?
Yes, without getting, because he is not required to follow 44 AD, he may fill P&L balance sheet if his commission income is less than 1 crore.
Sir, एक confusion है. Is it mandatory to get books of accounts audited if uh, audit has been done in all the previous years?
If 44 AD is applicable, then then he has to get books of accounts audited. Otherwise, if he has not done any 44 AD in earlier 5 years, then if his turnover is crossing more than 1 crore as per 44 AB clause A, then only he is required to get his books of accounts audited.
No, the question was like in previous all the years the turnover was going above the threshold limit, but during the year the turnover is below 1 crore. So
Okay. So
is it mandatory to get books of accounts
if
audited
in
since it
earlier,
is
if any of the preceding 5 year, he has not opted for 44 AD. Say, for example, in preceding 5 year, his turnover was every year exceeding 3 crore. But
yes?
during this financial year, his turnover is only 70 lakh. So he is not required to follow the 44 AD or not required to get books of accounts audited. He can only fill P&L balance sheet because he is out of 44 AD subsection 4.
And if the turnover during current year is above 1 crore
Then
but
he
below 2 crore,
then he may
means
either opt for 44 AD, then up to 3 crore or 2 crore, he may opt for 44 AD, or we'll have to get books of accounts audited.
okay. The SSC actual profit is 80%. Yes, this we have covered. Not for under specific profession. If the turnover is less than okay, sir. Uh, we have done with the common questions and maximum. Approx we have received 171 questions from the audience till 4:30. After that, also I think we have received some questions. So, if possible, we will share them a PPT or 99% of the question will be get cleared from that only. So once again, thanks to all the audience who have joined us for the wonderful session. Thanks to our speakers for the wonderful session, Rajesh Mehta sir. With his expertise, I know we must have learned something new or we must have cleared our all the questions which we were having related to this presumptive taxation schemes 44AD, ADA, and AE, and also the audit provisions. Since the ITR season has been started, the utility all have been came in last week only. So it's the right time to have this type of sessions. A wonderful initiative has been taken by the IDC committee, headed by the chairman Piyush Sajad sir and the vice chairman uh, Vishnu Agarwal sir. Thanks to both of them for organizing such a wonderful webinars. To all the audience, one small announcement: every Thursday from 3 to 5, we have a webinar of direct tax organized by the direct tax committee. So requesting all the members who wants to learn more, who wants to gain knowledge in direct taxation, they can stay connected with the ICI. And every Thursday there is a series of direct tax committee from 3 to 5. With this, would like to thanks once again to our speaker, Rajesh sir, for your wonderful session and your time. And thanks to our technical team, also the IDT committee. Thank you so much, DTC committee. And once again, thanks to Piyush sir and Vishnu sir for the opportunity.
Thank you. Thanks to all. Thank you, everyone. Thanks to Piyush sir, Vishnu ji, and thanks.
Yes, yes.
Thank you so much, sir, for your valuable contribution and for such a wonderful session. We truly appreciate your insight and time. Thank you, sir.
थैंक यू कृष्णा जी, आपने क्वेरी बहुत अच्छी तरह से हैंडल की.
Okay, sir. Okay.
Okay.
We can sign off now.
Can I leave
Thank you
now?
so much. Yes, sir.
Okay.
Done, sir.